Well, good day to everybody. Thank you for joining us today. Really a pleasure and an honor to be here as part of this ICON 2021. Um, really excited today to be sharing with you something that is really important to us and I hope also very important to you, which is around social responsible investing. It's a big buzzword nowadays. A lot of people um, understand maybe ESG as something that's closely related to this. So today we hope to share with you ATRAM's thinking about this, how we've integrated a lot of these processes into our own investment process, and why we think it's so important moving forward in the investment world. Start off first with sort of the most basic definition of what socially responsible investing is. And I'll refer to the acronym SRI a lot today. No? So SRI is obviously for socially responsible investing. And what it is, it's an investment strategy in the first place. So it is a strategy that considers both the financial return together with the social and environmental good that is brought about by this change in positive proponents. So what is important about this? I think traditionally when we look at investment products, we do investment research, the focus is really on financial return. We're all looking at the annual report for the direction of where the financial numbers are going, where earnings are going. Many people have different ways of looking at fundamentals. Some think the PE is the most important, others is book value, but it's all around the financial aspects of the company. And for many, many years, we've been able to measure that. We measure the growth. We measure where the company's earnings are going, the dividend. Socially responsible investing adds social and environmental good. What the company is doing there to bring about this change, right? So the question becomes, how do you measure that? Because we know how to measure financial return. We cannot measure, it's just a new way moving forward of measuring this type of social and environmental return. Over the last few years, investors have put more and more money into these strategies. Sustainable investing right now, there's a few ways to access that. There's funds globally, there are ETFs, and we can see the growth in AUM that has come in. It's reaching $100 billion. Look at this chart, how quickly it grew, particularly last year. Massive inflows into these strategies last year. Information from BlackRock, who works with us as a partner of ours, really is showing that this growth is going to continue. In global markets, they're expecting the AUM to go from about 18% of the portfolio today that's invested in SRI type strategies, going all the way to 37%, almost more than doubling. In EMEA and in Asia, we're seeing the same trends from around 20% to over 40%. And in Asia, we're only around 12% today, and we're seeing that go to over 22% in the next 4 or 5 years. It's a very short period of time. And these strategies really affect all groups of people. It affects asset managers, it affects the issuers, the companies, and how they report. It will also affect the regulators and the type of rules that the regulators require. So as an example of that, regulators more recently require now all publicly listed companies in the Philippines to present a sustainability report every year, only for the first time in 2019. So we are beginning this journey, and it's important that we have the data to be able to analyze, because unlike in the financial realm where the data is readily available, There's publicly available information that can be used. In the sustainable research world, you have to dig a little bit deeper. And you know that there's a lot more buy-in from the world on these prerogatives and this progression. And you're seeing demand for responsible investing grow. And it's a very clear mandate from the populace and from the people, I think, from investors themselves. And that's a good thing, I think. In Asia, we're still growing. Like I said, only around 12% right now of the portfolio or exposure in Asia is in sustainable investing. But it's expanding and growing very fast. China has the lion's share of these investments. Taiwan, Thailand, South Korea, Hong Kong are also quite strong. The Philippines, like I said, still growing, still beginning our journey, and we want to be at the forefront of that journey as we move along. The cost of doing nothing is massive. We've seen it. I mean, in the Philippines alone, the damage caused by Typhoon Hainan was significant. It was equivalent to all the earnings of almost all companies listed in the market in that year, save for the conglomerates. It was that big. Over $200 billion in natural disaster damage globally every year. So there is a cost to doing nothing, and I think this is why it's important to keep moving forward. It's not easy. It's not easy. There are very strong challenges. There are reporting standards that have no standardization. Like I said, in the Philippines, it's very new, and our standards are different still from others. There are different points of view from people. So when you build a process for sustainability, you have to. It's very subjective to what's important to you. That's the bottom line, and it depends on what a certain investor wants to focus on, where the scorecard or the research will be done. Sometimes it's very difficult to cover all angles of this. And of course, different areas have different risks attached to them. So it's quite a long, drawn-out process. But as we get more information and as companies are reporting more, then it becomes a bit easier to do. And what we try to avoid is sort of the check-the-box type of activity, right? Philippine companies traditionally have been very strong in doing corporate social responsibility. But very little of that has been measured. Very little of that is understood about the impact that it's created, the change that it's created. And so that's something that has to be done about. The other side of the coin is also a lot of people who don't believe in this, right? People still look for profit first and at all costs. And I think those companies will be punished in the long run. And that's why this is important for us to focus on as we move forward. And there are risks. This does not come risk-free. And they're both to the issuers and the investors. Compliance, for example, could be very difficult decisions for companies. The cost that could be incurred to move to a green or a sustainable approach could be high and could have an impact to potentially your sales, for example. But I believe that the next generation of consumers value this. And that's why I think it's a must do. It's a must do. It's what the investors will want, what is the thing to do. And I think the benefits will far outweigh the short-term costs of these challenges that both investors and issuers will have as we move along. And the cost of not doing it right has been phenomenally expensive. As you may be aware, Volkswagen recently had an issue that they dealt with regards to their diesel scandal. And the penalties and fines could go in excess of $38 billion for this. So again, it is the right thing to do, and if you try to cut corners, it will cost you. It will cost you. And everyone kind of says, some of these things impossible. It takes a long time. It's very difficult. But you have to start, and we believe that this is a super important thing. We believe that integrating all of these processes into our investment strategy is something that we've been doing and we will continue to do. And I think it will actually carry more weight as we move along in time, and be more integrated in our processes, and more important than it is generally for the public today. So how do we look at it, right? You have SRI, and what's the approaches? What are the different ways that we can invest when we look at sustainable or socially responsible investing? One is you can invest to make impact. One strategy is to invest for sustainability. And a third strategy, and we're trying to keep it simple here today because I don't have much time to try and give you the lay of the land, is investing via an ESG risk screening. And ESG, as you may or may not know, stands for environmental, social, and governance standards. And we at ATRAM have chosen two of these three strategies, really, to build scorecards off of. So we will not really be talking about impact investing today. What we will talk more about is our ESG strategy and sustainability. We approach this sort of twin approach to responsible investing via the ESG score and the SDG score. The ESG score considers ESG risk factors, so environmental, social, and governance, and to the financials and how the company integrates these factors with business strategy. The sustainability score considers how SDG score shows how a company may integrate into the operations and maximize the impact. So two things. One is really risk and risk management. Next is operational impact and integration. So continuing on our progressive approach to ESG integration, I want to first help you understand our ATRAM scoring processes. We do our research, in-depth research, and we measure this. And one of the measurement tools is our scoring process. And so we have different types of scores: the fundamental score, the credit score, the quant score. And today we'll talk a little bit more about our ESG scoring and our SDG scoring process and why it's important. Because I go back to the beginning. We are trying to here understand how we measure companies from a social and environmental impact point of view, a sustainability point of view. We know how to measure from the financial side. This is what we want to measure that we think is almost as important, if not as important, as the financials. So the ESG score starts off with a questionnaire, 15 items assigned to all the metrics, the E, S, and G risk factors. We want to see how management's actions have been towards minority shareholders, and there's a very important management questionnaire that we also run through. And ultimately, the tool is used to combine with our fundamental scoring process to give us a nice picture and a nice view of the company, a balanced view, the fundamental financial side and the social side. I think that's a great insight to being able to look beyond just the numbers of the company. The SDG score uses UN Sustainable Goals as a guide. We are very data-driven, so we get all of the information from this process from their sustainability report, which is required. And we use the scores to construct a portfolio and a product that we've recently launched. So when we talk about our ESG integration, we began the process in around 2018. We built our own proprietary scoring framework for ESG. We rated every single company that we cover in our ATRAM universe of Philippine companies. And in 2019, we integrated that ESG score into our fundamental scoring process. And I think it's helped us identify companies in a clearer light, in our view. It's a process that is evolving continuously. So our ESG scoring process has been modified, and we hope to soon launch an ESG focused fund, which we still have yet to do. Like I said, today our ESG process is integrated into our fundamental scoring process. The building blocks of this ESG scorecard these are examples of it. So under environmental, the environmental block, we want to see the quality of the disclosures the company has. We can measure air and water pollution use and the impact, biodiversity as well. On the social side, we look at labor and employees. We look at customer and clients and the effects there. Also in the community. On the governance, board composition, is there balance? Are there independent directors qualified and tenured enough? The integrity of the business, and make sure that governance, protection of minority shareholder rights, in particular, is very important to us, since we are always a minority shareholder in when we do invest in public companies. So this is the building blocks for our ESG scorecard, and I think we're very, very proud because more recently, very recently actually, just this week, we have been recognized by the Asset magazine with the editor Triple Star Award for ESG integration. The note they came out with, I'll read it, is the company has been actively integrating ESG into their investment process with a dedicated research team, reviewing and advocating corporate ESG disclosures and benchmark international standards such as SABS and GRI standards. So we're very, very proud of this, and very proud to be the only Philippine asset manager recognized by this group for our ESG integration. Now we'll move on from ESG to sustainable investing and our SDG scoring process. And I want to just use a quote of BlackRock here. And I find it very compelling quote because, let me just read it. Now, sustainable investing is about investing in progress and recognizing that companies solving the world's biggest challenges can be best positioned to grow. I just want to end it there. I think, this is the spirit that the companies that are looking to profit, of course, we're also we're not going to invest in companies that are not looking to profit. But at the same time, trying to solve these challenges and everyone doing their part. I think those are the companies that investors will gravitate towards and support their products. BlackRock, the largest asset manager in the world, has just put sustainable investing front and center in all of their processes. We think this is not a fad. This is something that we will do as well. Our sustainability approach started last year. We built a scoring framework and rated 46 companies, our initial group of companies here, that Philippine companies that we rated. Because of this, we were able to launch our first fund, actually, the SDG Philippine Sustainable Development and Growth Fund. And this scoring process will be continuously updated and reviewed as we move along, because it's never perfect, and I think it always has to evolve. But we're very proud of this launch and very proud of this product. And I'll talk to you a little bit about our scoring process. So what we looked at and said, a good idea here would be to look at all the UN Sustainable Development Goals, all 17 of them, and see if we can develop a scoring framework around these goals, asking questions of companies about every single one of these goals that the UN has set out to solve the world's biggest problems. And what we thought might be a good idea is to try and group these 17 UN Sustainable Goals into 3 core areas. And the 3 areas we chose were wellness, progress, and fairness. When you talk about wellness, here we're talking a little bit more about direct individual. And some examples, some SDGs that are examples of this are quality education, number 4, number 7, which is clean energy, number 3, which is good health and well-being. So really around the individual. The next channel that we're looking at is progress. And progress would have to do more with climate action, for example, or living in sustainable cities, responsible consumption and recycling, for example. This is progress, and this is looking at uplifting lives. And finally, the last column is fairness. Fairness would be more about peace and justice and gender equality and no poverty. So we try to fit each one of these 17 SDGs into one of these areas and develop a questionnaire scoring framework around wellness, progress, and fairness, where the ultimate objective is to score a company. So I really like this little triangle here that we're showing. If you look at the way to score, this company is scored. It's a food manufacturing company, quite large, almost $1 billion in market cap. So when you look at the scores, fairness, progress, and wellness, ideally, you want your triangle as big as possible. In other words, maximizing the scores on all areas. This company does quite well in progress. It's moving well in the right direction. But you can see lagging a little bit on the fairness and the wellness side. So we can then go back to the company and give suggestions where they need to improve if they want to improve these scores. They want to improve fairness and progress. They need to develop programs for the workforce. They need to monitor SDG data. They need to improve their research and development. So, these are not scorecards that we also want to use just for ourselves. These are scorecards that we want to share with the company so that they can also begin this journey, because there's no perfect score. Nobody's going to be perfect. Nobody's going to do everything 100%. But it's important that companies know where they are and that they begin this journey towards sustainable, socially responsible investing. You'll be amazed at the amount of data that we can start to get that's out there available because of this required reporting. Just quickly, in these 4 slides, 4 charts here, we can show you comparable CO2 emissions from 2019 versus 2020, comparable employee count, comparable water consumption, or waste generated. And you can see, obviously, in 2020, because of the pandemic and the lockdowns, much less water consumption, waste generation was less, employee count, unfortunately, less as well. But this is all data that we can now monitor the same way we would monitor the financial data. And that's very important to us. So, to end, why do we need this? Why do we need socially responsible investments? And I think it just ultimately reduces risk and makes the planet a better place for people, for purpose, for profit. Sustainable and socially responsible investing is not a fad, and we think it is the differentiator. Every analyst in the world can get the numbers. They're available in annual reports. They're available at Bloomberg and places like that. But unless you research the social and economic, environmental side of things, I think you're missing out. And that's why it's important for us at ATRAM to do this. And we think it's important for you to also understand this process and consider this as when you make your investment decisions. So that's my brief presentation for this afternoon or today. I wish we all learned something today. I look forward to engaging with you guys in the near future. Thank you very much, and good day to you all.